Tin's major use is in electronics, not in tin cans. And now we've come to the stage that people are widely recognizing, whoa, look at the tin price. That's more than nickel. And it's much easier to recover than nickel. The refining charges are much lower than nickel. And the world is going to be short of tin for the foreseeable future unless somebody comes up with a major deposit. The shortfall this year will be somewhere in the order of 15 to 25,000 tons of tin, and it looks like this is going to grow. So there is an awareness now that tin is an important metal, and there's been particularly in Australia, there's been a number of small companies floated to explore for tin. Most of the tin deposits in Australia have been turned over quite a few times. There are tin deposits which have been discovered more recently, from Morocco, for example. There's exploration going on in eastern Canada. But if you look around the world, the biggest producer of tin is in China. Nobody really knows what the heck's going on in the Chinese market and how much is being produced. Chinese authorities have closed down a lot of the small mines, but there's still some big mining operations there.
Well, tin at the moment is caught in a real supply-demand squeeze. On the one hand, we have supply being squeezed, a shortage of basic raw materials, tin concentrates, and on the other hand, the consumption has recovered very strongly after the recession of 2008, early 2009. We're back to the sort of levels we were in early 2008. Tin consumption being about 380,000 tonnes. The combination of the two has led to a deficit of approximately 20,000 tonnes of tin metal this year. And that is forecast to remain a situation for the next couple of years, basically. So the price is being driven by supply-demand factors. This does not look like a purely speculative boom. This looks like a really fundamentally driven demand. Stock levels in the LME warehouses are also at very low levels. So taking all the combinations together, demand for tin is very, very strong, and the supply is just not there at the present moment. What we see on the supply side, some of the measures taken by governments being permanent. That is the closure of a lot of the artisanal miners in China and also in East Africa, where the DRC government is trying to stop all artisanal mining and bring in major companies to develop long-term mines. That trend, I don't think, will change in the next 2 years. There's not a crowd of new suppliers. There are a number of small projects, particularly in Australia. There's one in North Africa as well, in Morocco. But the tin market, unlike the copper market, for example, does not have a long list of new projects being developed at the present moment. They are all relatively small. There is really no substitute for tin in solder at the present time, and that, of course, is the biggest market for solder for the electronics industry. And the tin plate industry is also very, very strong as well. And it's very unlikely that there will be major substitutions in either of those two areas. Well, Europe is a total market of over 60,000 tonnes of tin per year, approximately 1/6 of the world demand. The United States also has a market of about 40,000 tonnes a year. So between those two markets, there is a major opportunity for a new company to come in with a project of a scale which will fundamentally alter the supply side of the tin market, and particularly a company here in Europe as well. There is no major source of tin here in Europe at the present moment, and it is an important market. Well, economics-wise, you are 3-4 days trucking from your major markets in Germany, France, Belgium, the United Kingdom, and Spain. Spain itself is a significant consumer of tin. So logistics, transport costs are very, very much lower.